AMC's failure to delivers are absolutely insane. Now, as I'm sure you guys might already know, the failure to deliver numbers are at records, and they have stayed at records for weeks now. And from today, for the next couple of weeks out, really towards like as far as this chart goes to August 18th, you're going to be seeing over 10 million FTDs that need to be bought every single day. Today, you actually seen a very large jump in the FTDs that needed to be closed out by today. And look what happened to AMC stock. Now, there was obviously some good news, and we'll talk about that as well here in this video. But I think we could be in for something big. So let's go ahead and get into all of this information. We're going to take a broad overview of everything you need to know. So hit that like button and subscribe to the channel if you have not done so already. I'll try to keep this video short, sweet, straight to the point. At least I will try my best. Seems like there's always a lot of information to cover every single day. So first things first, you know the story with the FTDs, right? Hopefully you know what an FTD is by this point. It's a failure to deliver. This can happen two ways, either with option activity or with naked shorting. Now, to some degree or another, we've seen Hycroft Mining, we've seen BBIG, we've seen a lot of other quote unquote like secondary meme stocks over the last couple of months now actually hire private investigators to look at trading of their stocks, and every single one of them has found irregularities and have basically called on the SEC and FINRA and other agencies to investigate, and they really haven't done anything, but their private investigators can, put the pieces together and give you a pretty good picture of, what was going on with those other stocks. Now with AMC, for one reason or another, nobody seems to care. It just really doesn't make a whole lot of sense. Just nobody seems to care. Yeah, let me know what you guys think about that down below in the comment section. But the other way that this can happen, like I said, is option activity. And this is more kind of in theory why you should have FTDs. Naked shorting was outlawed and made illegal during 2008, during that great financial crisis. But with the option activity, think about it like this. You've seen incredible option activity recently. Incredible option activity. Those puts got blown up last week. Completely blown up, especially on Friday of, not last week, but the week before, when you've seen this news that the judge rejected the settlement. You've seen tens of millions of dollars flooding into AMC options that week, into puts that lost a considerable amount of value. Just instantly, hundreds of millions of dollars of value is lost. And this can create some FTDs, because if, let's say, you had a put, right, like a call it a $4 put or a $5 put, and AMC was trading at $4.20. Well, that Friday AMC stock jumped up to as high as $8 per share. Well, your put is now worthless, right? But if you sold that, you're going to be massively underwater. It might take you some time to be able to get your hands on all of the shares you need to actually deliver to the party that was correct in that trade, which was obviously the call buyers. If the call buyers decided to exercise essentially that call or whatnot. So these things can happen organically, long story short, on both sides, calls and puts. And likely there's a little bit of both going on. That's probably what you're seeing. But if you look at this in the grand scope of things, this is a multi-year chart for FTDs. This is in the millions. And I mean, what we seen back in January of 2021, when people actually gave a shit about AMC and all the potential naked shorting we were seeing at the time, those numbers were nothing compared to what you're seeing today. What you're seeing for today and the last really couple of weeks, but really months now, ever since about June, really late June. So a lot of it was in July. You have seen the FTDs in the millions of shares. So probably a little bit more of that illegal activity going on here. But as you could see, it's been going on to some degree or another for a while now. So let's take a look at this interesting situation. So you've seen the FTD numbers go from like nothing, like 5,000, 6,000, 8,000, 80,000, 300,000, in this range, couple 100,000, couple thousand every single day, until you got to June 6th. That's where you broke over 1 million again. And it basically went higher ever since. So we're currently at July 31st. So all of this in red, up until here, even today, I'll highlight today, all of this, up until the FTDs of June 26th, in theory, needed to be covered today, needed to be, kind of returned. Well, what that number was today was 8.8 million FTDs, worth about $35 million of AMC stock. Now, tomorrow, this number jumps from 8.8 million today to 12.6 million tomorrow. And then it's another 12.6 million the day after, 12 million the day after that, and on Friday, about 13 million. And then it ramps up even more from about 12,500,000 to 14 million, another 12 million, another 13 million, another 12 million, and then continues. Yeah, that's going to be on a Friday, is about 13 million right here. And then you ramp up even again, hitting 14 million again, and then you start to fall from 13 million to 12 million to 10 million, and that's the last failure to deliver number that we have on this chart. And what can you see actually happened with AMC's stock? I mean, it did fall during these periods around June 28th, but it was in that mid $4 range, kind of like we are right now. So these failure to delivers, the best way that you can kind of look at them is it's buying activity. It's buying pressure that will need to go into AMC. And it highlights kind of how offside some of these hedge funds and institutions are. When AMC starts to bounce here, and what it has been doing recently, they're just not prepared for it. So then they have to try to scramble to find all of these shares, and that in theory should help AMC stock to go higher. Not to mention that the news that we've seen today is that Barbie and Oppenheimer have literally just broken records for AMC. In the 103-year history of AMC, you've never seen a bigger week for AMC ever. This means it was bigger than Avatar, the original Avatar, which was the highest, box office grossing movie of all time. You're telling me these two movies brought in more money for AMC than that time, or Avatar 2 or the Avengers Endgame, a lot of your biggest movies of all time with billions and billions of dollars in the box office. This did better than that, and you're only at 1 billion globally. These two movies together have only made about $1 billion globally, or that's the box office. And Barbie could end up grossing more than $1 billion by itself when all things are said and done. So where's the money coming from? Well, obviously AMC has raised ticket prices, things of that nature, but a lot of this money, it's not coming from admissions. It's coming from food and beverage sales. It has to. With such a relatively small kind of week for the box office compared to what we've seen in history. Keep in mind, Avatar's a almost $4 billion, box office movie. Avengers Endgame is over $3 trillion. Avatar 2, I believe, is around $2.5 billion. I believe Avatar 2 is around $2.5 billion. So people are just spending more money when they go see this movie. They're getting more snacks, they're getting more popcorn, they're getting more drinks, and that's ultimately what kind of affects AMC's bottom line the most. They only make so much selling you actually tickets for the movie. If you don't buy anything, food or beverage, then it's just hard for AMC to turn a profit there or even break even. So That's a big reason why AMC stock was up so much today. Was up, 7.5% to close out the day. That's pretty damn strong, if I were to say so myself. You fell a little bit in after hours. You hit a high of $5.08 per share. You're sitting at $4.94 here in after hours. And that's ultimately what you need to see to get AMC to go higher and to stay higher, is the fundamentals getting better, right? And that's really what has been happening. You filled the gap, like I said previously as well, and you started to move higher as well. But not only that, there's a secular kind of rotation happening in the markets today. I talked about this in the last video as well, but I think it's important to kind of put out there again for anyone that's a long-term investor, owns stocks, or just maybe just AMC. It's still very important. But Biden, leave the politics out of it, please. He's trying to make it so instead of 10% of your discretionary income that you previously had to pay towards your student loan debt, now they want to make that just 5% of discretionary income. And if you make less than $15 an hour, you won't need to make any payments under this new option. So what this really is doing is it's taking the biggest negative catalyst that we have for a recession, for higher corporate bankruptcies. You know what goes along with a recession, right? Not good things. He's lowering the probability that happens. As of right now, the biggest thing really the only thing that I was like, hey, this could be a problem, towards the end of the year, it was student loan repayments, because people were just not used to paying student loans for over 3 years now, right? Since before COVID. So you had a lot of discretionary money, and it was easy for people to spend a lot of money because they had a lot of money and they weren't paying it an extra $300-$400 a month towards student loans. Now there's still going to be some money getting paid back, but this was the biggest upcoming catalyst that could have caused a recession. So it effectively looks like the recession is getting canceled as we speak. And that's going to be very good for valuations. And ultimately, it's going to switch that pendulum, and people will start to say, hey, maybe AMC can raise capital cheaper. Maybe this stock XYZ is not going to go bankrupt, right? Things of that nature. And that is massively bullish for the markets. Ultimately, the markets care about a recession. If we don't get a recession, because of partly, I think this would be a huge reason why, if that recession never comes, you kind of have a green light to own stocks, and riskier stocks at that. So there is that information. Now let's go ahead and look at the Ortex data as well. As we reported in the last video, the live short interest of free float is sitting at 29.6%. And you have 152.8 million shares that are currently sold short. Cost to borrow fees on Interactive Brokers around 150%. Cost to borrow max over here on Ortex 356.8%. So very, healthy levels. Anyone that is concerned about cost to borrow fees dropping, it's more so about how high have they stayed for how long. If cost to borrow fees spiked to 1,000% or 200% or whatever your high number is, and then fell back down to 10%, like couple days later or maybe a week later, that's not as good, right? But when you've been at 1,000%, you've been fluctuating between 1,000% and 300%. 300%'s high, 1,000%'s high. It doesn't matter. It's high. It's draining money from this trade, and from this point, most of these arbitrage traders are going to lose money in AMC. It's just already happening. Now, as far as the option activity, this continues to be kind of the most annoying thing with AMC, because they're using the options as leverage to kind of beat down the stock every single day. So far today, and markets are closed, so these are the final numbers. You have seen 54 orders totaling $13.02 million with a positive order value of 6%. But the stock was up to close the day over 6%. So if you didn't see this kind of bearish option activity, you would have seen a larger day for AMC. They're using this as really a suppression method more than anything else. So these are a couple things to kind of keep on your radar again as far as tomorrow and the economic data. I think that's going to be very important with the JOLTS job openings. You want to see this fall, because if not, the Fed is going to want to see higher unemployment if the job openings won't fall. So job openings falling, that's going to mean, again, potentially getting the Fed to stop raising rates and to actually cut rates. ISM manufacturing PMI, you want to see this come in strong as well, expecting 46.8. Last month's rating was 46. If this were to come in like 50, that would be really good for the markets, and the markets would absolutely rally off of that. The next big catalyst is going to be on Friday as far as the economic data. Well, you do have ISM services PMI for Thursday as well, but the next big catalyst is going to be Friday as far as economic data, where you get the unemployment rate and the non-farm payroll. So, taking all this information into consideration, obviously we don't know what's going to happen with the court proceeding. That's going to be the thing that really dominates AMC stock. But from my perspective, when AMC is putting up, new records for their overall business, that's what you want to see more than anything else. If you really want shorts to cover and cover for good on their short positions, you want to see good fundamentals. You want to see the short thesis getting worn down every day, every week, every month. And that is what is continuing to happen. So I really don't care what happens with the courts. I think as we've seen, if the courts deny this new settlement that is proposed, well, AMC stock's going to rally aggressively. If the courts let it go through and AMC raises billions and billions of dollars of capital, well, you see the business doing well. That bankruptcy concern is gone. You would see shorts cover on their short position. So let me know what you think down below in the comment section. What camp are you in? What do you think about FTDs as well? Do you think the 10 plus million FTDs that will need to be covered on coming tomorrow and then going for weeks is into the future going to have an effect on AMC stock? I would love to hear that from all of you guys. So that is it. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.